Hi, this is Stock Investor Davis. Let's take a look at JBL, reviewing its 2023 Q4, looking ahead to its 2024 Q1 projections, and closing with a technical analysis. Please like and subscribe. To start, let's get a general idea of what's happened and what's to come in the next quarter. JBL's fiscal year 2023 ended this quarter. In the full year, which is in the center of the screen, we see net revenue of $34.7 billion with $1.5 billion flowing down to the operating income. That's about 4%. In the fourth quarter, at the top, it had operating profit percentage of 5%, so it's improving. Looking ahead at Q1 projections at the bottom, its operating profit percentage is projected to remain at 5%. This increase in operating income is likely to flow to the bottom line, which is going to be better for us, so we're going to keep an eye on that. Now getting into the Q4 financial statements, specifically its income statement, the items highlighted in yellow are items of interest. Most importantly, we're seeing an increase in revenue, and it's flowing through its operating income. Not until its taxes do we see a big change that takes away from its improvements. I included the percentages compared to its net revenue on the right side for its full year and its most recent quarter. We're seeing improvements in its gross profit and its operating profit year over year, and especially in its fourth quarter when we compare it to the full year. Only the net income shows a decline due to the income tax expense nearly doubling. So we'll see how that plays out next year. Drilling into the revenue, we can see the company is diversified into 8 unique markets, all relatively balanced, with its smallest segment making about $3 billion and its largest around $6 billion. Highlighted are the top 3 markets, including auto, healthcare, and 5G, also highlighting the year-over-year change in each. Next, the balance sheet. Highlighted are all the accounts that have a noticeable change compared to last year. A few points to summarize the slide. Its current ratio is positive, and the biggest change is this addition of an asset for sale worth $1.9 billion. So what is that asset? The asset held for sale is its entire mobility line. That segment alone made more than $4 billion this past year. The company has even signed an agreement to completely divest in that line for $2.2 billion. We're actually going to touch on this a little bit further when we dig into the company's 2024 forecast, so just keep that in mind. Next, its statement of cash flows shows many changes compared to last year. Highlighted yellow are accounts that had a big change or are total figures. When looking at the total cash changes in its operation, investing, and financing, not much changed when compared to its prior year. The biggest cash swings are in its operating activities, specifically in its receivables, inventory, and payables. The company opting to pay more of its payables, collecting its receivables, and removing some inventory. Looking ahead to its revenue guidance for 2024, of its 8 segments, soon to be 7 segments, 3 are guiding higher, 3 lower, and 1 being flat. Its largest segment in 2023 is projected to pull back 11%, but its next 3 segments are projected to grow 9%, 20%, and 20%. Also, we see the company is accounting for the sale of its mobility line. It's nice to see the overall revenue is not pulling back that much, considering an entire market line is being cut. So we'll see how this plays out. Drilling into its next quarter, or first quarter of 2024, the company is forecasting a flat quarter for its DMS type revenues and a pullback in its electronic type revenues, assumedly due to its 5G decreasing, which was its top line last year, and likely a phasing out or a transition in its sale of its mobility line. Revenue is projected to be flat, possibly a little higher. Same for operating profit, and the earnings per share is projected to jump by nearly $1, from $1 to $2. That's where this one's really catching my eye, and I assume others. Also, projecting its operating margin to continue above 5% and near 5.5% in 2024. Then, looking out to 2025, a continuation of the operating margin improving past 5.5% and its earnings per share exceeding $10.50. Transitioning to the analyst projections as of 10/7, we can confirm the revenue earnings for the quarter and full year are in line with guidance. Also, its diluted earnings per share are in line for the fourth quarter. No guidance was given for the full year 2024, so that's something that we'll be flexible on. Looking at a more recent report, as of today, we see some slight changes up and down in its earnings and revenue projections. The full year revenue pulling back to $33.7 billion from $34 billion. This is a more reasonable estimate for this point of the year. But of course, we'll see how that plays out over time. Wrapping up with the technical analysis for JBL at $135. This stock is breaking out above its uptrend range, which began in March of 2023, since its year-end reports in October. Slight support was recognized at 102. We're watching to see how high this one continues to go as it continues to reach new all-time highs. It appears to be overpriced. Thank you for watching. Please like and subscribe.